To the Market Review program, where we bring you stories from the Nigerian capital and financial market as it relates with the economy. It's the last day of July 2020, July 31st, 2020, and on this very special day, we'll be bringing you some very robust reports and analysis. And out there for our Muslim brothers and sisters is a Happy Eid al-Kabir celebration. But what do we have to look at today? We're looking at the ProShare, Nigeria's leading financial information hub, published CEO Remuneration Report 2020, talking about paying the CEO in the pandemic, the unanswered question. We'll give you some excerpts from that report, and as we go on, we'll give you some one or two corporate results that's coming to the markets. So giving you updates on that, and has it been for you? Let's just tell you that this ProShare CEO Remuneration Report has been of talking points now since it was published yesterday, and we want to just give you some nuggets around it, excerpts around it. You will still need to log on to our website, www.proshareng.com, to read it, the full download. It's really interesting, and let's begin. Now, the first very important aspect of this report is the fact that it brings to the fore the new day's work. I mean, before the hammering of COVID-19 in 2020, most CEOs were confident that the tough business years post-2016-2017 recession was behind them. The optimism was justified by the rising gross earnings, falling in payments charges, and tumbling non-performing loans in the banking sector. For non-bank actors, rising sales and falling operating costs, despite relatively high finance charges, held out possibilities of stronger profit and loss statements and livelier statements of financial positions or balance sheets. However, that optimism has been quickly replaced by apprehension concerning the business outlook from the financial years 2020. Looking at full year 2020, it may become a definite game changer in determining how C-suite executives get compensated for their work or lack of it. In 2020, companies will expect sales to slide as they try to protect profit numbers by cutting back sales, general and administrative expense, in addition to cutting down on their distribution and marketing costs. Still from the stable of ProShare, how successful this will be will depend on the specific industry and whether the business is internally focused or externally focused. Businesses that depend heavily on foreign revenues and foreign inputs will likely suffer severe foreign exchange pressures, and this could hurt both sales and profit margins. Businesses that are inward-looking are less likely to be subject to the swings in foreign exchange rates and difficulties in foreign exchange assets. This would seem to suggest that inward-looking businesses may weather the COVID-19 storm better than their more outward-focused counterparts, who, in addition to foreign exchange difficulties, will need to resolve the slow rebuilding of global supply networks. The Nigerian telcos, for example, are focused internally on customer service interface and user experience, providing Nigerians with digital voice and data solutions that enhance the quality of their businesses and personal lives. Revenues have increased significantly for these companies between 2019 and 2020. And for example, MTN Nigeria, the big player in the Nigerian market, results for full year 2019 showed that the telecoms giant gross revenues rose from 1.04 trillion naira in full year 2018 to 1.17 trillion naira in full year 2019, representing a growth of plus 12.75%. Indeed, over the same period, the company's profit before tax rose by plus 31.07%, increasing from 221.34 billion naira in full year 2018 to 290.10 billion naira in full year 2019. Interesting. Now, just to set a context based on this, I mean, this report is 7 sections, huge, massive, but we want to set a context that amidst the COVID-19 pandemic, there was an interesting trend captured by this report. Several CEOs took a bold step to forgo remainder of their salary, to just make some steps to adjust operations in their company and really support the activities of their company. I want to bring you those global CEOs because this is something that can be emulated across the world. I mean, this is really remarkable. Mr. Ann Sorensen, CEO of Marriott Hotel, sacrificed or agreed to forgo the remainder of his 2020 income. Mr. Edie Bastian, CEO of Delta Airlines, agreed to forgo his salary for 6 months. Mr. Leon Joyce, CEO of Qantas Airlines, also agreed to forgo salary for the rest of the year. Logan Green and John Zimmer, for those of you that know Lyft, their co-founders, pledged to contribute their salaries through the end of June to support driver partners of the company during the coronavirus outbreak. Rajiv Bajaj, CEO of Bajaj Auto, announced payment cuts for himself, while Vijay Sharma, CEO of Paytm, announced he wouldn't take 2 months' pay. So, that shows you how CEOs are adjusting globally to the pandemic and its effect on company revenues and operations. From that path, it shows you how they understand that in this period, you have to make some necessary adjustments and, of course, also sacrifice. But let's go on to the interesting part of this report, which shows that the top 10 highest paid CEOs in 2019. And just listen to this. First is Mr. Ferdinand Moolman. Of course, we talked about MTN. He's the CEO of MTN Nigeria with a total pay of 585.94 million naira. That's in the Information and Communication Technology sector, ICT. That's number one. The second highest paid was Mr. Dubril Adewale Tinubu. He's the Group Chief Executive of Owando PLC with a total pay of 568 million naira, oil and gas sector. Third was Mr. Ojuneku Austin Avuru, CEO of Seplat PLC with a total pay of 440 million naira from the oil and gas sector. Number four was Mr. Shegun Agbaje. He's the CEO of Guarantee Trust Bank with a total pay of 399.7 million naira from the financial services. Taking the fifth position is Mr. Yor Nsako. He's the CEO of Unilever with a total pay of 302.52 million naira in the consumer goods sector. Mr. Michael Puchekos, CEO of Lafarge, took a total pay of 282.38 million naira from the industrial goods space. Mr. Jordi Borubel, CEO of Nigerian Breweries, received a total pay of 271 million naira from the consumer goods space. To make the number 8 position was Mauricio Alahon, CEO of Nestle, received a total pay of 218.08 million, again from the consumer goods sector. Engineer Dr. Lars Richard, the CEO of Julius Berger, received a total pay of 217.07 million naira to take the 9th position in the construction and real estate sector, while Mr. Baker Bugunda, CEO of Guinness, received a total pay of 193 million naira from the consumer goods sector to make the 10th position. Those are the top 10, as you can see on the screen, top 10 highest paid CEOs for 2019 from this report. Now, let's look at some analysis. For the analysis, 4 out of the top 10 highest paid CEOs in 2019 from this report were from the consumer goods sector. 2 out of the highest paid CEOs from this 2019 report were from the oil and gas sectors. Yes, those are showing you how consumer goods and oil and gas were major contributors to this top 10 highest paid CEOs. Some trends from this report to you are something that you would really want to understand. And let's begin with the aspect of the new consumer reality, still from this very fresh report from the Stable of Prussia. Within a COVID-19 world, the consumer would look towards obtaining goods and services, yes, within a market framework that is dependable, fast, and qualitative. The new consumer with access to a large amount of comparative data on vendors and service providers will likely press firms to deliver goods or services within exciting new standards as their incomes thin down or remain flat and their sensitivity to quality for payment becomes heightened. Corporations will increasingly need to figure out how to add value to service and goods at lower operating costs. The challenge will be for companies to improve the quality of their goods and services while avoiding passing the heavier incidence of supply chain disruption costs to consumers. This is according to Chris Okenwa, Managing Director of FSB Securities. He says, this is like asking companies to give consumers higher quality of goods or services, but at lower prices, given the realities of cost brought about by either supply chain disruptions or supply chain switching. The possibility of companies coming down on prices is as good as hoping for Father Christmas to give presents in June. That can happen. The idea is novel, but unlikely, Okenwa insists. What also striking part of this report for me is the shareholders' disturbing silence. This is what the report says. I mean, shareholders are always active. They're supposed to be bringing management and leaders, business leaders to account. And it says that in recent years in Nigeria, shareholders have lost their voices. The once powerful activism of shareholders in the 1980s and 1990s has given way to a disturbing silence in the 2000 turn of the millennium. Shareholders have gradually become uncritical rubber stamps to the corporate boardrooms, as directors have taken shareholders' consent on boardroom decisions as predictable. Shareholders have become optical illusions to advertise corporate governance compliance, but their role as a check on company activity is muted. Shareholders have been majorly powerless in determining both corporate direction and executive remuneration. It will be expected, for example, that shareholders of Nigeria larger corporations would over the years have insisted on greater female representation in boardrooms. Yes. Women need to be properly represented. This case was made on page 40 of the 2019 CEO Remuneration Report. In that page 40, it emphasized the fact that despite a general perception that women make better corporate managers than men in Nigeria, top highest paid executives, not a single woman is featured. That's true. Not a single woman appears in the top 20 highest paid CEOs of companies listed on the Nigeria Stock Exchange. The absence of a woman on the list of the top 20 most highly paid executives of companies on the Nigeria Stock Exchange speaks to the relatively weak corporate positioning of women in Nigerian boardrooms. While it is true, yes, that women like Mrs. Ibuku Awoshika of the First Bank, she's the chairperson of the top-rated financial institution, is an exception rather than the rule, and her position as a non-executive chairperson does not place her in the highest ranks of corporate income earners in the executive boardrooms of listed companies. Besides, it would have also been expected that shareholders would have insisted that corporate chief executive remunerations and that of other executive directors should be closely tied to annual corporate performance or an average of corporate performance over 3 years to adjust for special situations such as COVID-19. The inconvenient indolence of shareholders, the report says, has had the disturbing effect of making board executives less accountable to owners of the business and less focused on sustained growth in return on equity, which in turn has resulted in suppressed corporate valuation. Well, this for the shareholders. We have engaged extensively in ProShare. We engage with notable shareholder group leaders across the country like Sasoni Musu, Mr. Boniface Okezie, Mrs. Bisi Bakare, amongst others. And we know that this is something that they would take seriously, because from this analysis, you can now understand why there's need for more vigilance from shareholders. But you will get more around this interesting report from our ProShare research team here. That is where this report came from. This is how it was developed. We need to get further insight into this report. But during this period of the holiday, isn't it nice if you could go to our website, www.prochange.com, and click on our search button on the ProShare CEO Remuneration Report 2020. You can get onto that report telling you about the analysis. Download it and you would see a lot in terms of the sections, 7 sections that provides in-depth analysis on these highest paying CEOs, the direction, even down to consumer issues, down to all aspects of what is driving operations, performance, and the industry. That's what you will get when you log on to our website. But next week, we'll engage our research team, and you must not miss Tuesday next week when we'll discuss further on this report. So that's from ProShare, the CEO Remuneration Report 2020, the getting paid in a pandemic, the unanswered questions. Definitely we'll get some feedback and answers on that. But if you want to send your comments, your views around this, you can send it to news@prochange.com or research@prochange.com. We would give you feedbacks on this. Engage us on social media at ProChange on this report. We are willing to hear from you, your views, your thoughts. But please, let's make it very constructive. Let's make it civil. This is not the platform to say words that are not savory. Please make it very concise. Your opinion, your remarks about this report. We would like to hear from you, because That's what helps us to serve you better. Yeah. Well, reports are still been coming in from quoted companies. And this is the season, this is the second quarter of 2020, so expect reports to come in. And so even while you're there on your screen, holiday and relaxing, we have some reports for you. First, Wema Bank PLC has released its second quarter 2020 unaudited results for the period ended June 30, 2020. And here are the key highlights of that report. Gross earnings declined by minus 6.6% to 38.2 billion naira from 40.8 billion naira in the previous quarter. Profit before tax declined by 34% to 1.7 billion naira. Profit after tax declined by 34% to 1.5 billion naira. And net assets declined by minus 0.1% from 55.16 billion naira to 55.11 billion naira. That's from Wema Bank. Now, the Initiates PLC released its second quarter 2020 audited results for the period ended June 30, 2020. And here are the key highlights from Initiates PLC. Revenue declined by minus 7.7% to 246.35 million naira from 266.99 million naira in the previous quarter. Profit before tax declined by minus 119.9% to 10.73 million naira. Profit after tax declined by minus 231.8% to 14.10 million naira. Net assets declined by minus 2.8% from 882 million naira to 857.39 million naira. C&I Leasing also released its second quarter 2020 unaudited results for the period ended June 30, 2020. Let's get some highlights from C&I Leasing. Gross earnings declined by minus 5.9% to 15.29 billion naira from 16.25 billion naira in the previous quarter. Profit before tax declined by minus 58.4% to 379 billion naira. Profit after tax declined by minus 69.1% to 268.04 million naira. Net assets grew by 11.2% from 14.75 billion naira to 13.26 billion naira. Union Bank Nigeria PLC, one of those establishment banks, you may say, released the second quarter 2020 unaudited results for the period ended June 30, 2020. Here are the key highlights. Gross earnings grew by 7.7% to 81.9 billion naira from 76 billion naira in the previous quarter. Profit before tax declined by 7% to 11 billion naira. Profit after tax declined by 9% to 10.8 billion naira. Net assets grew by 2.4% from 252 billion naira to 259 billion naira. We'll be talking about MTN, and here MTN has now released its second quarter 2020 unaudited results for the period ended June 30, 2020, and here are the results from MTN. Revenue grew by 12.5% to 638 billion naira from 567 billion naira in the previous quarter. Profit before tax declined by 2% to 140 billion naira. Profit after tax declined by 5% to 94.9 billion naira, while net assets declined by minus 4.5% from 146 billion naira to 139 billion naira. Yes, that is for MTN. Now, Computer Warehouse Group, CWG, also released its second quarter unaudited results for the period ended June 30, 2020, CWG. And here are the analysis from that report. Gross revenue grew by 36.3% to 5.43 billion naira from 3.99 billion naira in the previous quarter. Profit before tax grew by 115.4% to 239.36 million naira. Net assets grew by 199.8% from 575 million naira to 192 million naira in its results released for the period. Now let's go on to AXA Mansard. Mansard Insurance released its second quarter 2020 results, and let's give you some highlights from it. Its gross premium grew by 4.03% to 30.54 billion naira from 29.35 billion naira in the previous quarter. Profit before tax grew by 180%, yes, to 4.40 billion naira. Profit after tax grew by 154% to 3.60 billion naira. Net assets grew by 16.7% from 35.10 billion naira to 30.07 billion naira. Dangote Sugar Refinery, that's our last in terms of the results we'll take for today. It released its second quarter 2020 unaudited results for the period ended June 30th, 2020. Revenue grew by 28.5% to 103.23 billion naira from 80.36 billion naira in the previous quarter. Profit before tax grew by 0.1% to 17.04 billion naira. Profit after tax grew by 5.5% to 11.58 billion naira. Net assets grew by 10.7% from 108.13 billion naira to 119.71 billion naira. That's for the results we will take for today. But let's just give you a snapshot. What has been happening this month in the market? Yes, of course, the Security and Exchange Commission as a new Director General, Alhaji Lamido Yuguda, has now begun to settle, is now settled down and is now beginning to take up the work. And his major focus and area, like he said, will be market surveillance, ensuring that market infraction is not tolerated. That's zero tolerance for market infraction. Ensuring that the retail investors, that they create the avenue for Nigeria's capital market to gain back the trust and confidence of retail investors. And also work with all stakeholders to attract investment into the market. Yes, the SEC leadership has engaged the House of Reps Committee on the capital market, working together to see how they can deepen the space in terms of regulatory processes and legislations that will improve market activity. Also, this month saw more activity in terms of the Capital Market Support Committee for COVID-19, various donations and announcements from key players in the exchanges and in the market. It's coordinating activities, donating ambulances and various other equipments that will support the tackling of COVID-19, mitigating its risk in the country. And in the month of July also, there's been so much in terms of debt, bond market activities. The debt market also saw some activities from Nova. Nova reported a very huge subscription, and the subscription was an encouragement to its 10 billion naira 7-year tenure market participation. Also, in terms of the debt market, FMDQ it held its 8th annual general meeting group and has said it will continue to expand its activities to drive efficiency, to maintain that position of being Africa's integrated financial market infrastructure. That's from the FMDQ, having its 8th group AGM, all annual general meeting this month. And yes, the NASD PLC also engaged in terms of market activity through virtual webinars, discussing around how the market, the unlisted securities can continue to be deepened and encouraging market activities, innovation. And the guest speaker at that forum is the current chairman of the Association of Securities Dealing Houses of Nigeria, ASHON. Yes, it's no longer stockbrokers, but securities dealing members of Houses of Nigeria, ASHON. And he was the guest speaker, Mr. Patrick Ezeagu. He was talking about the need, again, of innovation and the fact that, yes, groups like ASHON are ready to take on board, driving the market activities and creating value. In this one, we had the opportunity of speaking with the vice chairman of ASHON, who assured us that they are working tirelessly to bring on board the Lagos Commodity Exchange, Futures Exchange. That would be a game changer once it comes on board, and we're really looking forward to that development. Also in the market, the response to the Central Bank of Nigeria's retention of monetary policy rate at 12.5%, the foreign exchange market continued to exercise caution, even as the Central Bank of Nigeria continued its activity, but in a very slow scale in terms of interventions in the import and export window. It also reinforced its adjustment of the rates. Yes, we saw now that Central Bank of Nigeria took the line of unification of the rates. So we're seeing now that the Central Bank of Nigeria is taking on board the views of World Bank and International Monetary Fund in terms of the need to unify the exchange rate. So that had its own impact on the market. We also understood from analysts that remainder of the year in the equities market, we will likely see much sell-offs in the equities space, but much opportunity for long-term investors to engage in the capital markets. Also, the quest continues from stakeholders for the government to leverage the capital market for the activities. That means state-owned enterprises, every activity of privatization should go through the capital market. And we expect that the leadership of Alhaji Lamido Yuguda, the DG of SEC Nigeria, will reinforce that, will engage government policymakers to make the capital market attractive and accessible for carrying out these activities. It has been an interesting month. So much has happened. At the global level, as we wrap up, we saw that the European leaders agreed on the 750 billion euro emergency support fund for COVID-19, which helps to an extent stabilize the European market. But in the U.S., Fed chairman of the Federal Reserve of U.S., Jay Powell, re-emphasized the fact that COVID-19 will have an impact on the U.S. economy and showed the market signal of more dovish approach in monetary policy. So, what an eventful month we have. We'll continue to engage you in the month of August on the developments in the capital market, financial market, as it impacts the economy. And that'll be all for Market Review for July 2020. It was nice having this with you. Join us for the month of August throughout for reports, analysis, and exclusive interviews on the Nigerian financial and capital market. Also log on to our website, www.prochange.com. We just told you that we've published the ProShare CEO 2020 Remuneration Report. It's a report you can read through and make your holiday worthwhile. To all investors and the public, this is a period you have to be careful. Your savings, your investment, please do not put it in platforms that are not are promising you 100 to 200% returns and are not registered or regulated by the Securities and Exchange Commission. Do not give in to their schemes or strategies because they're out to rip you of your hard-earned money. Till we come your way again and we transit and move into a new month of August. Thank you for watching. Have a lovely day and stay safe.